TSMC, or Taiwan Semiconductor Manufacturing Company, manufactures, packages, tests, and sells integrated circuits and other semiconductor devices across the globe. TSMC holds around 70% share of global market in which other companies design the chips, and companies like TSMC act as a manufacturer for those designed chips. TSMC's stock price did not start rising with the release of large language models like ChatGPT, but in 2025 it caught a significant hype. Let's dive deeper into the business of this chip manufacturer to see if it's still worth investing at the all-time high price levels. I have annual revenue numbers for TSMC in new Taiwanese dollars, which can be hard to interpret. Luckily, we don't need to. What we can do is look at the rate of change. In the past 12 months, TSMC's revenue grew 31.6%. A year ago, the growth rate was similar, and in the past 5 years, annual revenue grew 23.3% on average. This is truly amazing for a company of this size. Three-quarters of TSMC revenue come from customers of North America. The rest is divided between Asia regions and with a small 3% share of revenue coming from EMEA countries. Out of 6 segments that TSMC reports revenue in, only 2 amount for roughly 90% of all business. These are high performance computing and smartphones. In 2021 and earlier, biggest part of revenue came from smartphone segment. But since then, high performance computer segment took over, and now it accounts for 58% of all revenue, leaving smartphone segment at the second place with 29% of total revenue. AI boom and data center development spree in USA is the major catalyst why a high-performance computing segment is doing so well for TSMC. Let's have a look at the profitability of TSMC. Company is operating at 59.9% gross margin, 50.8% operating margin, and 45% net profit margin. Not only these margins are exceptionally high, meaning that TSMC is pocketing 45 cents from every dollar of revenue, but these margins are increasing too. TSMC has quite inconsistent free cash flow margin, but over the 11-year period it averages at 23%, which is solid. Let's see how management allocates the cash. Around half of free cash flow this and previous year was allocated to dividends. Dividend share used to be much higher, but it makes perfect sense because TSMC's revenue was super high these past 2 years, and companies prefer to have a stable dividend policy instead of fluctuating one. TSMC's management doesn't repurchase more shares than needed to offset stock-based compensations. That's why we see stable shares outstanding over the 10-year period. Worth mentioning here that TSMC does not issue high amount of stock-based compensations as USA companies, especially in tech sector, tend to do. TSMC kept its debt levels unchanged in the past 5 years. Debt levels are so low compared to the scale of the company's operations that it's not even worth talking more about them. It's important to mention that TSMC can employ capital very effectively, generating over 20% returns on it. Every year it invests between 30 and 40 billion US dollars back into the business. This investment rate makes TSMC a great compounder. We can see that over a 10-year period, net profit per share, for example, grew 6 times. Let's start from solvency because this one is a no-brainer. TSMC debt to equity ratio is only 18%. It's not high and it's consistently staying at this level. Company's annual operating profit can cover annual interest payments hundreds of times. This company is not going bankrupt. There are more risks in regards to concentration in supply and demand. First of all, TSMC already has manufacturing operations abroad of Taiwan and is expanding on them, but still, majority of product is manufactured in Taiwan. Some estimates have it as high as 90%. If something is disrupted in Taiwan, for example, Chinese military invasion, revenue could drop very sharply. Secondly, even though TSMC serves more than 500 clients globally, biggest clients account for a significant portion of total revenue. For example, Apple has been a biggest client for quite a while now and account for roughly 20 to 25% of total TSMC revenue, which is massive. Other big clients are Nvidia, AMD, Broadcom. While these clients are big and each likely account for single digit of TSMC revenue, they don't come close to the importance of Apple. However, This customer concentration is not a big near-term risk, as nobody can replace TSMC in terms of advanced tech manufacturing in such high volume. Now, this will probably raise some eyebrows, but I value TSMC stock at around $35 per share. You could add some on top of it because TSMC is such a strong player with a huge market share, but nothing will come even remotely close to the current price of $332. The company is great, I would love to invest into it, but the price is so far away from reality that I cannot recommend it as a buy. That's why my rating for TSMC is bearish. If you have something to add, I would love to see your thoughts in the comment section below. Thank you for watching. If you found this analysis useful and if you're looking for more investment ideas, subscribe to my channel. I'm Arimas and these were my insights. Stay curious, stay disciplined, and may our returns be strong.